Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES moved higher on very light volume, and at this point, the buy side continues to be in control. Immediately above here, we have the all-time high at 21.26 quarter, and so far, ES is setting up to at least test the all-time high. Now, we are running on extremely light volume, but remember that volume is not correlated to direction. So just because we're running on light volume doesn't mean that ES can't go up and test 26 quarter. We can still technically head higher from here, but the light volume environment does make for a lower opportunity environment because the ranges typically are not very wide when the volume is so light in the market. So that means we do need to be very selective on the trades that we do take. This is more of a summertime market now, and there is no scheduled economic catalyst, economic report that can really move the market big one way or the other. So unless we start to see a rise in relative volume with some decent momentum behind it, it's going to be much better to be more selective on the trades that you take. And that means if there's no really high quality opportunity that sets up on the day time frame, then it's better to sit out and not put any capital at risk rather than jumping in and getting aggressive when the environment is not really conducive to that. So off the open, we have the all-time high, 26 quarter, primary resistance. ES does not have to stop there. NASDAQ has been pushing to new highs. There's still that negative divergence between the S&P and the Russell, where Russell still has some catching up to do, but that doesn't mean that ES can't go higher and Russell eventually catches up. In the short term, testing 26 quarter is very doable on the day time frame today, but that's only 4 points away from here, so there's not really a whole lot of opportunity on the upside from this aggressive of a price. And for that reason, in order to justify a long setup up here, you are going to have to see some momentum to the upside, or at the very minimum, you want to see tick holding above zero and not showing any negative momentum. Like for example, on Friday, you saw where ES opened up, and even though ES was trading right near the prior close, there was a negative disconnect on the advanced decline, where you were seeing a lot of bearishness in the underlying internals, even though price was actually quite high. So you don't want to see that off the open. And as long as AD is showing a pretty decent level, which it probably will, given that TF has recovered a bit overnight, then we can just kind of chop up here and slowly make our way up to 26 quarter. On the downside, the immediate inflection point is going to be near 1775 to 1875, which is the overnight low and the gap fill. Below that, we have the prior VPOC at 15 quarter, support at 13 to 14 and 09 to 11. And by that point, ES is probably going to be short-term exhausted, and we can expect some rotational activity off of 13 to 14, 09 to 11. But if this market is truly strong, then ideally you don't want to see it pulling back all the way even to 13 to 14. And that actually holds the overnight range and then goes up and tests the 26 quarter. But this entire range is very narrow, and that means just very limited opportunity. So be mindful of trade location. Just understanding which side is dominant and which direction is more probable is not enough to justify a trade. The risk reward really has to be there. And if it turns out that you have to use a 3-point stop to enter a trade where your profit target is 4 points, then the reward to risk equation just doesn't make sense. And you're going to be better off just preserving capital and then waiting for an environment where the volatility is there, the opportunity is really there. Because again, even in high volatility environments, it's not like our stop loss goes up by a lot. If normally you're using a 2-point stop, you might go up to a 3 when the volatility is high, but the reward side of the equation is multiplied several-fold. So it's better to wait for the market to get a little bit more volatile, get a little bit more volume and participation, rather than use up your ammo now when the opportunity is just very mediocre. But there could still be a long setup on the day here, as long as the underlying momentum and internal support the upside move. And then again, the first inflection point is 24 quarter to 26 quarter. The market does not have to stop there. NQ has been making new highs, and ES can follow and go as high as 30 quarter, 32 quarter. And keep in mind that above 26 quarter, there is no hard resistance. At that point, it's really going to be about just the range potential of the day, and the type of volume we're seeing in the market is going to help us determine that. So 26 quarter is really the final inflection point as far as hard resistance goes. Above that, it's really going to be just depending on how much volatility and volume we see on the day time frame. But given the current level of volatility and volume, 30 quarter, 32 quarter could be a spot where the ES stalls out yet again. And that's kind of been the theme so far, is that even though the market's been heading higher, it has been pausing and stalling at pretty much every resistance zone, and that can happen even off of 26 quarter. We can get profit taking off that level. So, I think we just have to play defense on both sides, long and short, just because the ranges have really tightened up and the volatility has tightened up. So, again, be very selective. If you don't see a good setup, just sit on your hands and wait. Volatility is cyclical and things will pick up again. But today, very light econ calendar, light volume, so there's not really a whole lot to do unless you're actually presented with a decent trade setup at good enough trade location and there are enough signs pointing to a high probability move in your direction. And even then, you're probably going to want to play defense with that trade and not give it too much room or time to really play out. And if it's not really working, then probably just wait for another good setup. So those are our main thoughts heading into the open. Let's see if the buy side can maintain control here, and we'll take it from there.